Hello traders, Gary Wagner here. Just before 11 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. November 25th, 2016, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we've seen. In fact, we're going into the third week, really, of Trumpland, of the effects that we are seeing because of President-elect Donald Trump. We've got gold, which closed in essence unchanged in spot, closing lower on the day. Gold closing in December's contract down about $6 at $1183.40. It traded to a low, and the low is what's really important. We'll want to look at that on a chart at $1170.30 and a high of $1192.70. Now, we did get a mixed bag today because although we had gold down, we did have silver close higher. Silver closing up about 12 cents in terms of COMEX futures at $16.52. The low 16.15 and the high 16.57. The key between spot and futures at this point is they're absolutely coming into alignment. 1183.80, we're just settling in gold, and as I said, we're within $1 of spot prices, and the same can be said for silver. Silver also, as I said, traded higher, but look at the net change we're getting in spot. Spot is up 23 cents at 16.50. So traders, first chart that I do want to look at on today's show is a simple weekly chart. On this weekly chart, I've got my long Elliott wave count along with a couple of key levels, Fibonacci retracement levels that are key levels that we need to watch. So first and foremost, I draw your attention to the low that was achieved this week, which sits roughly at 1170. That's the low that we hit today, 1170.30. And if you recall, we have been looking at a key level, that key level being a 61% retracement. That's right in here. And of course, it is a 61% retracement from the move, the low of the year down here at about 1050 up to the high that we've achieved this year, which comes in at around, I'll call it 1380. When we plot that, as you can see, we've got a 61% retracement at 1169. Now, this would be a potential or logical place to look for potential support, but we have to do that with one large caveat. And traders, that large caveat is a 61% retracement is a logical point to look for in terms of a market selling off, which has just dramatically had a decent upcline. However, at the same time, what we have to realize is a typical B wave will come in anywhere between 50 and 75% the move that we saw in A. So our A wave took us up from, as I said, call it 1040, 1130, 61% retracement. That takes us to about 1170, and we could still see the market track to as low as 75% or a 78% retracement, which comes up above 1100, but it's in the low $1,100 area. So what we want to do now is see how this market reacts after the weekend, if we find support, and most importantly, if we find some kind of a bounce to the upside, that would really signal a potential bottom. So let's put ourselves in this continued wait and see attitude. We did believe the market had further declines to go. We've got those declines. On a technical basis, we are at a point to look for support, but on a fundamental basis, nothing has really changed except the dollar. Dollar had shown some real signs of weakness for the first time in the last 2 days, and that would be impetus to see gold travel to higher grounds. We are looking at a weekly chart of silver futures, and we've talked about silver over the last couple of weeks is really disconnecting from gold in terms of how it moved. Here is a day where you had gold in spot, in essence, unchanged, lower by about $6 in futures. Silver futures, while gold futures were down, silver futures were up about 13 cents, a 0.75% rise to close at 1652. What is noteworthy on this chart is the fact that we plotted a 61% retracement. That, of course, is a retracement like the one that we've done in gold from the low that we have seen silver trade to this year up to the high at 21.22. And then, of course, we're calculating or plotting a 61% retracement. Now, of interest is the fact that the market opened slightly above that price point, traded to a much higher high than the price point and a much lower low than the price point on the week, but closed right at that 61% retracement. You can see they're virtually overlapped, price and the fib retracement, where you cannot see both of them. They're pretty much identical at this point. So like gold, I think that the key is going to be following the U.S. dollar, whether or not the U.S. dollar does begin to show some signs of weakness next week, or if it continues on that upward surge. However, the one thing that we do have to note is there is an absolute disconnect between gold and silver pricing. In other news, although it was a shortened trading day, we did have the Dow Jones Industrial Average, and I'm not sounding like a broken record, but the fact is we've seen the Dow Jones again go to a new historical high, closing up about 68 points at 19,152. When we look at the Standard & Poor's, of course, that was up about 0.4% at 2213. And then when we look at the NASDAQ, that also traded higher on the day. NASDAQ closing up about 0.4% at 4868. So traders, what is the effect of this most current presidential election on U.S. equities? And to do that, all we really need to do is to take a look at a daily chart of the Dow Jones Industrial Average. November the 8th, although we don't have it scaled properly, but we can see from what action is going on, really occurred right in this area. This is just following the next day following the election. Of course, we're looking at the Dow Jones Industrial Average, not the futures, so it doesn't account for the 800-point drawdown immediately following the election, and only accounts for when it reopened in the United States, trading under 18,000, and now closing well above 19,152. That is what? An 1,100-point gain in a period of time of just about or just under 3 weeks. Incredible move to the upside in U.S. equities. So in other news, crude oil falling out of bed today, off about 4% on the day, a $2 decline per barrel, 45.96. Apparently, the accord that they have been attempting to reach in Vienna is not as clear-cut as it first seemed, with some squabbling from Iraq. We also have talks stalled by a non-OPEC nation, Russia, which they had set to speak with the Saudis, and that didn't go down as planned. Therefore, we've got confusion and lower oil pricing. So traders, as we have said, we would probably see crude oil trade within a defined range. We have been using these channel lines, they're linear regression lines, to really look for potential tops and bottoms. As you can see, we're set for 22 cycles on this daily chart. We'll keep the same cycles for our weekly chart. We have our lower, upper, and middle. Of course, on our daily chart a couple of days ago, we did hit the top in terms of an intraday high, but we closed well within these lines, and now we have sold off and are quickly approaching the midpoint of that particular cascading channel line. Now, I've converted the chart to a weekly chart. I've kept the same setup in terms of 22 cycles. So now we're looking at a 22-week channel in which there has been a slight upward bias. However, it really becomes apparent these highs at around 52, these lows at around 42. And the fact of the matter is we have traded within this channel to a larger extent, moving to the tops. Of course, we missed it right here, but to the larger extent, trading in this defined channel since June of this year. We look at this midpoint, you can see that we had a week with a tremendous high that was pretty much given up as the OPEC Accord kind of fell out of bed. The U.S. dollar, which has just been on an utter tear, going to highs that we haven't seen in about 13 years, since 2003, over the last couple of days has shown the first sign of declines. We do have the U.S. dollar index today off about 0.2% to close at 101.47. So interestingly enough, unlike U.S. equities, which really took on the Trump effect and really began to take off following the presidential election earlier this month, the dollar's really rise to fame, so to speak, began at the beginning of October. We were trading sideways pretty much up until then. And then in October, we noticed that we had a tremendous upside spike, taking it to about 98, and the tact had really changed. In other words, the actual vector that this market moved up became a lot more steep. Traded sideways for a while, of course, hit this tentative top at around 99, retraced one more time, and then, of course, here is our election results as they come in, and then the tact became even steeper. And as you can see, during that time, we've only had 3 days of down days since Donald Trump became elected as our 45th president, right here, yesterday, as well as today. Today being the first time we have had 2 down days consecutively since the presidential election took place. Will this trend continue? Is this simply a consolidation point, or are we looking at some sort of a tentative top now that we've broken well over 100? We'll have to see how that unfolds next week. So traders, as I spoke about in my opening letter today, I awoke this morning after having a joyful and quiet Thanksgiving. I hope all of those in the United States did the same and had a peaceful day yesterday. But I awoke realizing that we're living in a different land than we were, say, 3 weeks ago since the election of Donald Trump. Key levels and key reversals that we have seen really transpire in the market, such as the equities turning around and moving to new historical all-time record highs, the dollar becoming very, very strong, actually moving up to a point that we haven't seen since 2003, and the precious metals literally falling out of bed the following day after the election concluded, and we saw gold really go from above 1,300 to where it sits now at under 1,200. A tremendous drop in value and a drop in a very short period of time. Whether or not these trends will continue, no one really knows, because until President-elect Donald Trump becomes the president, we won't know how he governs and what parts of his rhetoric will actually be parts of his platform and what parts he'll kind of push away. It's obviously within all of our best interests, regardless of who we voted for or whether we live in the United States or abroad globally. It's within all of our best interests that he does a good job, that he learns to temper himself, that he learns to work within the context of his new position, which is the most powerful man in the world. To that end, we should all wish him good luck. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you next week for another daily update and review. Bye-bye.